Once again, welcome to the Equity Management Academy coaching session for March the 2nd, 2019. On this segment, what I would like to do is take a look at the previous week's action since Thursday that we came into this week and pretty much show you the process that we go through every day in this particular chat room that we use to execute, confirm, and validate the application and execution of the VCPMI automated algorithm for self-directed individuals. The first thing that I do here is the previous night, roughly around 6:06, in this case on Thursday p.m., we published the data for the following trading day. It's the initial data, and we pretty much look into the comments into the numbers once they are validated and confirmed, and we use the TradeStation automated indicators to validate the artificial intelligence of the VCPMI, as well as, of course, the spreadsheets that we use that we post for self-directed traders in our website by approximately 9 o'clock Pacific Standard Time. And so we have a couple of formats that we present the information, and once the information is validated, then obviously we begin to identify the market in relation to these different levels that we use. And I begin to update the room. And in here, basically, this was the weekly chart that we're using here. When you see on the chart, we're using the thinkorswim platform, by the way. The /ESH19 is the weekly indicator, the weekly chart, and we apply the weekly indicators to this weekly chart. And I make comments on it, and basically throughout the day, I give indications in terms of the activation of the VCPMI. And I say here a close below 2805 is a short trigger. And when the signal is activated, I indicate to sell short the weekly at the market. And I give the price that I went short at, 2800, the weekly signal. I give you the stop level, which is the 2805 level, which is the pivot above, and we're using the 15-minute bar. And I pretty much confirm to you the entry point with my execution on thinkorswim. And in here, you can see the intelligence, pretty much the price came right through the sell one indicator of 2805. And as you know, this is a setup. This is the first setup. And using the 15-minute bar for day trading, the close below activates the trigger point. And in this case, the market came down, closing 27.9875, and we took a short position. You can see it here. My entry point was 2880.62. And automatically, my stop is 2805. So I was risking 5 ticks, and I have my stop. I don't need to worry about it if the market closes above it. If I choose to manage my risk, the most conservative way, you put your stop right above the level that you sold at, the pivot that you sold at. And that's your first stop. If you're doing multiples, for example, you can use part of your position, stop out here, part of your position. If it goes up to sell 2 level, you can initiate the second short and use that sell 2 level as your stop. So depending on how you want to manage risk, you can customize this algorithm once you understand the logic and the methodology and the application of the artificial intelligence. So in this case, we took a short position, and coincidentally, at the same time, the daily signal became very active. And on the chart, the symbol for the daily is the /ES. That gives you the daily chart. We upload the information, the data points on that chart. Now we have a weekly and a daily chart that is giving us signals. And in this case, the daily trigger a point, triggered a short trigger at 2801, which was the sell 2 level of the daily. The sell 2 level has a 95% probability that the reversion will occur back down to the mean. It's one of the highest probabilities in terms of the extreme above the mean of the relative implied volatility 2-to-1 factor, which is the sell 2 level. And the artificial intelligence specifically tells you that if the price closes below that level, that it activates a trigger point. And automatically the target is the level above. The level below. And the next level below. And so with the weekly signal being activated, what we have here is a daily and a weekly double harmonic signal. And I tell you, a close below 2801 on daily activates a short signal. The weekly target is 2785. And once the position begins to enter into a profitable level, the first thing that you do is you trail it to break even. And so we lower my stop now to 2800. That's my break even entry point. And I specifically tell you, if you have multiple contracts, you take out 5 ticks on the first contract. And in this case, we took out 6 ticks at 27.95. The market came down to 27.95. I took out 1 contract. I was out with 6 ticks at 27.95, and I have my stop on my balance now at break even. The level below on the daily of 27.93 is the target, and I ask you to cover that balance at that level. I give you an indication to once again look for a conservative entry on the daily signal on close below. There are 2 entry points. The opening is the aggressive and the close is the conservative. And for you guys that have been trading this a little bit, now you can begin to understand that not only you have 3 stops to protect your position, but you also have an aggressive entry point and a conservative entry point. The aggressive entry point is when the setup, which is the previous 15-minute bar, closes above the pivot. That's a bullish setup. When it does that, you can actually, aggressive traders buy the opening of the next bar. You still use your stop, which is the level below, and if it closes above, your conservative entry point can be activated. Therefore, you can enter your position with a conservative entry point and an aggressive entry point, validating the signal now. Now you have 2 positions open. Your stop is the same level below, and your target automatically is activated the next level above, whatever that entry point is. If it's an entry point from sell 2, the sell 1 target is your next level. If you're doing the weekly short, okay, at say 2800, and the daily sell 1 is 27.93, and the weekly, let's say, sell 1 is 27.90, your first target, you would use the daily target below your entry point as a potential target for you to unload or liquidate multiple positions. So what you're seeing here is a little more advanced in how we connect the daily, the weekly, and the monthly numbers to lock in profits when the signals are activated. The market came down to 27.93, and I went flat the ES, as I stated here. Once you accomplish the target, you go flat again and you allow for the market to dictate and validate the next signal. And so in this case, the 2793 was the daily target, the closest one. And I wanted to wait to see what it does. If it closes below it, I'll go back in and short again. It closed below 2793, and I went short at 2792.50 here, as you can see. I posted the trade again and show you basically that the signal was activated now from cell 1 on the daily. So now you have a daily short signal that was activated from cell 2. Now it's being activated from cell 1. You have a weekly signal that's been activated since 2800, which is open. So now you begin to see the supply come into this price level that connects the daily levels of supply with the weekly levels of supply, and now we have a double trigger point, a double harmonics. And the daily short trigger is activated with a 2787 target. My stop automatically is the level above, 2793, using the 15-minute bar for day traders. The market came down to 2788. I decided to cover all my positions. I'm happy with the profit. I made my goal, $1,000.50 trade profit for this particular move, following exactly the methodology and the artificial intelligence that is provided by the VCPMI automated algorithm as a self-directed trader. I am flat. I took out altogether about 21 ticks for the day. Thank you. I'm done for the day. At 8:55 a.m., I was done for the day. The total net profit was $1,050 for the day. And, we began to look at other markets here. I had a question about the gold market by Tekra 10. Would I consider buying the gold market and the silver in triple harmonics? I published a report in Seeking Alpha. We write quite frequently in Seeking Alpha, and you could take a look at the latest report that I published there on Tuesday of last week, and which I basically anticipate that the E-mini S&P it is a bull trap, and I also published a report on pretty much the gold market. Is it a bull trap? And this report was published on February 21st. And I gave you a pretty clear picture of what the expectations are for the VCPMI coming into this week. And based on the VCPMI, I said at the beginning of the week, we're coming into the week with gold having a bullish weekly trend momentum. If gold closes below 1294, it would negate this bullishness to neutral. The monthly sell 1 was 1338, which was accomplished, which was completed, while the sell 2 level, if we go into a blow-off acceleration, is 1356. We are waiting for the market to close below 1338 to activate a short signal. If we close below 1313, it would activate the VCPMI by 1 level of 1307 to the by 2 level of 1296. And this is the report that we published here based on when the market was at 1318. It came right into the sell 1 level of 1324 to 1330, which I indicated to take profits. And furthermore, closing below that 1338 as indicated, activated the longer term targets here of the lower by 1 by 2 levels. And so the market in gold came. If we look at the chart in gold, it came right down into. Let's see if I can get this chart going here. $1291.30. If you look at the chart on the left, $1291.30 was the low, and we were able to cover the shorts. And now we're waiting for the weekly. Actually, the weekly reports to be published here this weekend, in order for us to evaluate the position over the weekend, see what the indicators are, and go from there. We are beginning to put out the report as the weekend progresses. So by Sunday, 2 p.m., you can come here to the members area, and obviously you can have access to the report by entering your password and clicking on your subscription on the right side, and that will give you the information for the following trading session. Okay, and so we'll set it up here as we come into for Sunday night, Monday, as we come into this week, and begin to you might say, adjust, prepare the positions based on some of the indicators that we're getting. These are the numbers so far initially for next week. And on the E-mini S&P here, we're looking at an average price of $27.98. The levels of support that seem to be coming in here are $27.82 to $27.59 for next week. The daily indicators are into the 27.74 to 27.89 level. The 27.98 is the daily average, and so we're coming in here identifying the daily average and the weekly average almost at the same level, and that is giving us again an indication that the supply level and price is getting lower, therefore more supply seems to be coming into this price level that is greater than the demand that essentially is coming in here, and as a consequence the price is beginning to adjust lower, as we confirm here basically now that we have a daily, weekly, and once we get the report of the monthly here put out over the weekend, we'll take a look at the gold market, we'll take a look at the mini, and by Sunday afternoon 2 p.m. you'll be well prepared. Okay, let me come back here to the room and see if I can pick up any question and answers that you may have. Does everybody hear me? Testing 1 2, or have I been talking to myself? Okay, good. Okay, great. Okay, who wants to start the first question? Just know that this Thinkorswim platform is going through a bit of, I think, maintenance over the weekend, so I'm not sure that it's going to be reliable, but let me see if I can bring in my TradeStation platform here. You may want to think about any questions. D Soap, Would you be so kind to identify your email address? I'd appreciate it so we can get you on our subscribers list and continue to service you. I would appreciate any of those that put in guest or do not have an email or I do not recognize. I appreciate if you can let me have that information. Moving on here, this is the TradeStation platform as of the close on Friday. And so let's see if I can use this for the time being. Any questions at all? D-SOAP, what does six times six mean? I don't, did I miss something here? D-SOAP is asking a question here. Is it? Or I'm not sure. Does anybody have any questions here at all? Cam? What correction are you talking about? The S&P, as I said earlier, when we complete the numbers over the weekend, we will get a better idea, but it does not look like the correction is over. In fact, it looks like it's building a major top here, an intermediate top. We've accomplished targets of 78.6% retracement from the highs that we saw above 29 here in September, down all the way to the 2316. And if you take a look at the price over the weekend between the daily, the weekly, and the monthly, where they are in the supply area in red, it's indicating basically that that we have some kind of a topping formation harmonically. The markets are overbought and are at the extreme above the mean daily, weekly, and monthly. I think it's a matter of who's leading who, and I think the Nasdaq has been leading the way, and I think the S&P is going to catch up with the Nasdaq. Actually, the S&P is holding on, building a longer top, and let's take a look at the Nasdaq here. Yeah, the Nasdaq is a little more active here, and it looks like it is building some kind of a top. I don't I don't think that. Let me see if I can bring it up a little bit. Yeah, all the indices are into the supply area. So I think you're going to be getting basically selling into the rallies from here. If anything, you're going to start getting a lot of supply come into the market. We have another question, Cam. That on what time frame are you talking about? Most days we have been getting V-shaped moves most days. The dailies, yeah, right into the supply levels, and then you begin to see the supply come into the market, and then the formation changes. So it's been pretty active, the market, moving into that 2800 area once again. From 2316, you're looking at a 500 point move. Um, the market recouped 78.6% of the drop, and validated now. It pretty much turned that downtrend to neutral to up. Now the reversion to the mean probably will try to find the equilibrium of the price and where it is and where the average price is, and that's when pretty much I believe we are going to identify the real fair value of the market. Right now, based on the VCPMI, I would not touch the long side, even if it goes higher. But, when you put on the Fibonacci retracement, the trend lines, you put on the VCPMI, you overlay all of that, and it's telling you extremely overbought short-term, intermediate to long-term. If you get sharp pullbacks, you obviously want to take a look at the long side. But I think you want to let the market clean up this bull sentiment up here, this bullish sentiment up here, which I believe are weak buyers up here. And when it identifies the equilibrium, back down into maybe that even 2650 area, 2700 area, that's when we'll take a look and see what kind of buying muscle we have down there. The SPXS, yes, I'm holding on to it. I am covered. I'm short the 23 calls against my average price of 22.50, and I collected about 80 cents on the short calls. And so if I get exercised at 23, I collect a nice buck, a nice buck 30 as a profit, on my shares, and I'm comfortable with that. And those options expire on March 15. So when you buy in the ETF, you can cover it by selling calls above the market, or vice versa, depending on how bullish or bearish you are about the market. Once again, I appreciate those guests that are coming into the room. If you can provide us with your email address, we would appreciate your cooperation very much. Any more questions here, please? You're looking at the TradeStation program right now. What you see on the chart here is generated, completely automated in TradeStation. These signals here that you see are completely automated based on the intelligence that I'm teaching you in the self-directed room. And what you see here are basically the signals that were activated on a completely automated basis, where it's completely done by a robot. It's done in the TradeStation platform, and I use it, to validate the signals, the self-directed signals that we use, that we trade in the room as well. So you can monitor the automated signals, but I want to just tell you that the automated is automated. It's like an ever-ready rabbit that trades constantly through supply, through demand, through the mean. And what I'm teaching you in the room is basically how to choose the most optimal levels of the algorithm, and that is when the price reaches the red levels of supply or the blue levels of demand. And I tell you, if the price gets down to the mean, you don't trade it. It's pretty choppy. I let the robot resolve that issue when it trades around the mean. But in the meantime, I look to trade the highest probable levels, and that is when the price reaches the levels of supply in red, like you see here. The reversion occurs. It comes back down to the mean. It reverts back up above the mean into the sell 1, sell 2 level, and that's pretty much what we're doing here with the mini. So This is the automated VCPMI that is available in the TradeStation platform. What else would you like to know, Vic? Just to follow through with the results here of the NASDAQ seems to be the most profitable in the trades. If you can see here, the total profits trading the NASDAQ is 34,385. Basically, what you need is to trade is $8,560 as a margin. This is calculated based on $50,000 initial principal. And we have made this trading one contract, okay, using only $8,560 margin. So we've made on that money $34,000, okay, just to give you an idea of how robust basically the system is. Here it tells you pretty much the program on the short trades does 52.6% profitable trades on a 1.1, attend profit factor. And so it's a profitable system. It's a profitable algorithm. This is the automated. The maximum drawdown was $1,195 on a $50,000 investment. And it is a very, very robust program that you certainly can apply it if you want to as an automated program, or you can use it as to validate your self-directed portfolio. I'm sorry, Cam, what was the question? One of the things I want to mention here is that I do not rely on backtesting results because they do not take into account certain criteria that we use in real trading. The relative implied volatility, live relative implied volatility, is not taken into account. When we backtest it, it only gives us the results of the closed out signals, but it doesn't measure, you might say, some critical components that kind of skewed the results. And so even though it shows some great results, what I like to do is simply prospectively follow the signals, and that's what we do here in the room, in the chat room. We trade the actual mini here, and we've since we started trading the mini in the room here, we've executed trades in here that are, I think we made about $36,000 in all the trades that, in fact, was audited since the beginning of the year. And this is all documented. This is the TradeStation platform, and you can see here trades on the E-mini, 36,000. So the automation varies depending on, again, how you manage it or how you monitor it or how you control it, and it varies obviously from instrument to instrument. So to open the automated account with TradeStation, you're looking at least about a $10,000 minimum margin requirement for one contract, in order for you to day trade one contract. And about about 12,000, I would say, would be a safe amount. You calculate if the margin is 8,000, you only have 4,000 left, to you might say hold the position. So you don't want to, undercut yourself. And what I'm trying to show you here in the room, Cam, is how you can take that same signal, not take the risk of a margin position, and still be able to make the percentages very similar to the ones that you would take on margin. But when you calculate the results and you don't have the risk of margin, that position holds a lot more intrinsic value for you. And again, it's a question of how you manage the risk. In the futures, obviously, you got to manage the risk extremely close. And, you got to be in and out a lot sooner, more active in management. If you're not in front of your computer, don't day trade the mini. So there are certain rules that I, as a trader, want to follow to make sure that if I'm going to trade the mini and take the margin and take the risk, I'm going to be there to make sure that, I can control it. In order to alleviate some of that stress, that risk of margin, so to speak, then, I look at situations like ETFs, for example. And, in trading the fund, the hedge fund that I'm trading, it's a conservative hedge fund. It only does ETFs and securities, and it's up 10% since the beginning of the year. And I'm comfortable with managing the risk in getting these results because I don't need to take, that much risk to be able to produce what I consider to be an average rate of return. So once again, we always come down to the individual choice of how you want to manage your risk. Yes, the 36,000 is in day trading, one contract in just the mini. Correct. Yes. And that is essentially executing the signals that the automation does. Outside of the signals that do not conform with the conservative approach that I'm teaching you as a self-directed individual, which is to essentially identify the highest probability trades only. You with me? Because you're not a robot. And so you want to manage and trade when you get the highest probability signals only, and that's what I show you here in the room. And so if you came to the room and you saw the signals activated, even if you did half of that, I think you should have done very well. This does not take into account options. This does not take into account the securities, anything else except for the day trading, the mini. Correct. Any more questions? If you haven't been in the room, or you're not familiar with